For more on Amazon, let's bring in Maxim Group senior analyst Tom Forte. He has an outperform rating on the stock. Tom, your takeaway from what we heard, especially in terms of what I would call maybe mixed guidance here, AWS perhaps coming in a little softer than expectations after the strong cloud results we got yesterday from Microsoft, but yet some strength in places like advertising.
Yeah, so I definitely think Microsoft's strong performance there had investors wanting more from AWS. I think the important thing here is that if tariffs result in macroeconomic weakness, are we going to see a slowdown in the cloud computing business and in the advertising business? Given that's relatively high margin, I think that's the big risk for Amazon. Otherwise, they seem to be navigating tariffs well. I think their marketplace model positions them in that regard. Also look for additional details on their CapEx spend. If tariffs make it more expensive, are they still going to spend $100 billion or are they going to spend more? But I would say good numbers, decent guidance, given the situation.
Given what we heard from Meta and Microsoft yesterday on those conference calls, where both of those companies basically doubled down on CapEx spending as it relates to AI, is Amazon in a position to do anything but that as well now?
Absolutely not, yeah. So I highly expect them to maintain the $100 billion. All systems go on the CapEx spend for AI. But we'll be curious to see if tariffs result in making it less efficient.
Tom, after Alphabet's pretty strong quarter, Meta, Reddit, et cetera, there seems to be a story here, at least among the stronger players, on ads. Do you think that this is a longer-term story amid uncertainty where the economy, companies are looking to target ads in order to move what they can? Or is this perhaps part of that pull-forward story ahead of tariffs where these were beneficiaries, but that perhaps drops off later?
Yeah, so John, I think you're hinting, and I agree, that it's very encouraging that the digital ad market is holding, because usually first sign of macroeconomic weakness, that's where you see weakness, is in digital advertising. It's possible that some of it might just be a sector shift, so less advertising in the auto category, more advertising in other categories that are holding up relatively well despite the tariffs. But I am very encouraged at the digital advertising results that you're seeing this resilience despite concerns about macroeconomic weakness because of the tariffs.
Amazon has been fond of pointing out how much third-party sellers contribute to the e-commerce business. I imagine now, with what's going on in China in particular, the tariff story is going to change that message in some way. I'm not sure in what way. Do you have an expectation?
Yeah. So my expectation is that, again, the marketplace model should insulate Amazon. But as you pointed out, with 60% of units sold third-party, they are more dependent on third parties for revenue and profits within the e-commerce category than they've been historically. I do think there's a small silver lining for Amazon on the de minimis to the extent that there's less competitive pressure from Temu. I think that had been affecting Amazon. They had some efforts there, but they were small. So net-net, I think the marketplace model will insulate some of the impact of tariffs, and then having a strong advertising and cloud computing business that can keep the shares going.
All right. Tom Forte, Maxim Group, thank you.